Okay, welcome to Stock Talk with Nico Criticos. This is part 2 of looking into what stocks super investors sold in Q1 of 2023. So, the last video I did the buys, now we're going to go to the sells. Let's see which stocks were being sold off the most. So at the top of the list, we have 15 sells from Microsoft. The interesting thing is I think what you're going to see, because Microsoft was also on the list of the most buys. So I think what you see is with those top, 5 to 7 tech companies, the Microsoft, Apple, Google, Amazon, Meta, those just get traded more, I think, and that's why they're always at the top of these lists. So this doesn't mean it's a bearish sign for Microsoft because you had a bunch of super investors buying. Now, I mean, you could say that it's the same people who bought at the beginning of the quarter maybe and sold at the end of the quarter. That's another possibility. Meta platforms, I don't know why. I don't like that. I would not be selling Meta at 246. I know it's been on a huge run. If you bought it at, $90 or $100 and you're up, whatever, you could be up 200% or something. If you're up that much, then that's great. I mean, I can understand why you want to take some profits, but I think Meta has a long way to run. It trades at a much cheaper PE ratio than the rest of these tech companies. So Meta is one I'm still, even though I'm up a decent amount, I'm not selling Meta probably anytime soon. I wouldn't sell Meta till it goes over 300, probably towards 350. Visa, this was also on the buy list. Lots of sells for this one, lots of sells for Google, lots of sells for MasterCard. I bought into MasterCard like a month ago. I bought into United Health a month ago. So, I don't know if I'm bearish on any of these. Just because they're being sold off doesn't mean it's a bad thing. And it's a lot of those investors and hedge funds, they do a lot of swing trading. They buy and sell based off of, a month or a couple months, what happens in a short period of time. Berkshire Hathaway, I haven't bought into that one recently. JP Morgan, this one I would understand. I think JP Morgan at $140 a share, that's high. That's not, I don't see a lot of room for JP Morgan to run. Amazon, I don't understand why you would sell Amazon at this price. I think Amazon is one of those stocks that was beaten down a lot, and that one has room to go. Booking Holdings, this one I looked at a couple months ago too. This one's interesting. They hold a bunch of other I forgot what they hold. They hold it's similar to an Expedia or something. They compete with Expedia and Airbnb. Then you have Adobe. See, I have my Adobe position right here. I would not be selling Adobe either. I bought Adobe when it came down to 340. I was buying more Adobe. So I would not be selling Adobe unless it was, at least $400 a share. There was some bad publicity, I guess, about it ever since their deal with Figma didn't go through. Or, I mean, investors were unhappy either way. Investors were unhappy that they were paying the 20-something billion dollars, and then they're going to be unhappy that the deal's not going through. So it doesn't make any sense. What else do we have here? Wells Fargo, never been a fan of that one. The financials are not good. Oracle, the financials are not good. Micron, I can see it, but that one is going to be I think that's a riskier, it's less predictable. Charles Schwab has very nice numbers. The return on capital numbers are very strong. I would be interested in buying this if it was at the right price. Bank of America, I've been buying that. I don't know why would you be selling that at $28? No matter how scared of the banking crisis you are, I would think that Bank of America is one of the safest stocks out there. That's Warren Buffett's second largest position. So I don't know why they would be selling that. American Express, and I mean, if they're selling at $28 for Bank of America, they're selling at a huge loss because the stock normally trades at $40, $50. American Express, this is what I mentioned in the other video. I like American Express. I believe they're the biggest credit card processor, I believe, or not processor, but credit card company. So I like American Express, but it has to be at the right price. Procter & Gamble is boring. That's low growth. I mean, I guess if you want extreme safety, but at that point, that company's growing so small that inflation pretty much is outpacing Procter & Gamble. I like Starbucks. I like Disney. I bought both of those. I sold my Starbucks, though. And then Disney, I've been buying Disney. I don't know why they'd be selling it. I mean, there is some unpredictability at Disney right now, but they own too much to really suffer, I think. So thank you for watching, and I will see you guys in the next video. Goodbye.